Hey Volt Army and crypto enthusiasts! The long-awaited moment has finally arrived: the approval of the Bitcoin ETF. As a crypto investor, this news is undoubtedly exciting and filled with potential. The creation of a Bitcoin ETF has been a highly anticipated event within the crypto community. Up until now, investors had to navigate the complexities of buying and storing Bitcoin directly, which posed significant barriers to entry and potential security risks. With the approval of a Bitcoin ETF, the process of investing in Bitcoin becomes much more accessible and familiar to traditional investors. Despite recent reservations from SEC Chair Gary Gensler, major financial institutions have persisted in pushing for Bitcoin ETFs. The approval opens the door for 11 eligible applicants to trade on exchanges. Importance of Bitcoin ETF approval. The recent announcement by the SEC is a monumental milestone for the crypto market as a whole. It signifies the growing acceptance and recognition of Bitcoin as a legitimate asset class within the mainstream financial industry. This newfound accessibility to Bitcoin through an ETF opens the doors for a wider range of investors to participate in the market, including institutional investors who were previously hesitant due to regulatory concerns. Furthermore, the approval of a Bitcoin ETF brings a level of legitimacy and credibility to the crypto space. It demonstrates that regulatory bodies are willing to embrace digital currencies and provide a regulated framework for investors to engage with them. This, in turn, could attract more institutional capital and drive further growth and stability in the overall crypto market. Impact of Bitcoin ETF approval on the crypto market. Following the announcement of the approval of the Bitcoin ETF, the price of Bitcoin surged to $47,000. Yet, beyond the expected spike in value, the approval of a Bitcoin ETF is probable to have a significant impact on the crypto market in various ways. Firstly, it is likely to lead to an influx of new investors who were previously on the sidelines, waiting for a regulated and familiar way to invest in Bitcoin. This increased demand could potentially drive up the price of Bitcoin as more investors compete for a limited supply. Additionally, the introduction of a Bitcoin ETF could bring greater liquidity to the market. Currently, buying and selling large amounts of Bitcoin can be challenging, as it requires finding willing buyers or sellers. With the ETF, investors can easily trade shares on traditional exchanges, providing a more efficient and liquid market for Bitcoin. Furthermore, the approval of a Bitcoin ETF could bring more stability to the crypto market. As institutional investors enter the space through the ETF, their conservative approach and risk management strategies may help mitigate the extreme price volatility that has historically plagued Bitcoin. This increased stability could attract even more investors who were previously deterred by the unpredictable nature of the market. Potential benefits for crypto investors. The approval of a Bitcoin ETF comes with a range of potential benefits for crypto investors. It provides a convenient and regulated way to gain exposure to Bitcoin. Instead of going through the complexities of setting up and managing a digital wallet, investors can simply buy shares of the ETF through their brokerage accounts, just like any other stock or fund. The Bitcoin ETF allows for greater diversification within an investor's portfolio. By holding shares of the ETF, investors indirectly hold a diversified basket of Bitcoin, which can help mitigate the risks associated with investing in a single cryptocurrency. This diversification can be particularly appealing to conservative investors who are interested in the potential of Bitcoin, but are hesitant to put all their eggs in one basket. The Bitcoin ETF may offer tax advantages compared to directly owning and trading Bitcoin. Depending on the jurisdiction, gains from the sale of ETF shares may be subject to different tax treatments than gains from selling Bitcoin directly. It is essential for investors to consult with a tax professional to understand the specific tax implications in their country or region. How to invest in Bitcoin ETFs. Investing in a Bitcoin ETF is relatively straightforward, especially for those familiar with traditional investment vehicles. To get started, investors will need to open a brokerage account with a platform that offers access to the approved Bitcoin ETF. They can then fund their account and place an order to buy shares of the ETF, just like they would with any other stock or fund. It is important to note, different platforms may have varying requirements and restrictions for investing in Bitcoin ETFs. Some platforms may have minimum investment amounts, while others may impose limitations based on an investor's country of residence. Investors should carefully review the terms and conditions of their chosen platform to ensure they meet all the necessary criteria. The time frame for investing in a Bitcoin ETF after its approval can vary. Typically, it may take a few weeks to several months for the necessary operational and regulatory processes to be completed before the ETF becomes available for trading on various platforms. Expert opinions and predictions on Bitcoin ETF approval. The approval of a Bitcoin ETF has sparked a flurry of expert opinions and predictions within the crypto community and beyond. Some experts believe that the ETF will lead to a significant and consistent increase in the price of Bitcoin during 2024, as it opens the floodgates for institutional investors and brings a new level of legitimacy to the market. They argue that the ETF will act as a catalyst for mainstream adoption and further growth in the crypto space. As with any investment, it is essential for investors to consider multiple perspectives and conduct their own research before making any decisions. While expert opinions can provide valuable insights, they should not be considered as definitive predictions or guarantees of future performance. Alternatives to Bitcoin ETFs for crypto investors. While the approval of a Bitcoin ETF is undoubtedly a significant development, it is recommendable for crypto investors to explore alternative investment options that may better suit their individual preferences and risk tolerance. One such alternative is investing in a Bitcoin IRA through a reputable platform such as Bitcoin IR. Opting for this strategy empowers investors with complete control over their Bitcoin holdings, offering the potential for capitalizing on the cryptocurrency's price dynamics and reaping tax benefits inherent to an IRA structure. Additionally, some investors may choose to allocate a portion of their portfolio to other cryptocurrencies besides Bitcoin. While Bitcoin is undoubtedly the dominant player in the crypto space, there are numerous other digital assets with unique characteristics and potential for growth. Diversifying across different cryptocurrencies can help spread the risk and potentially capture additional investment opportunities. Platforms like Bitcoin are a standout not only for their user-friendly and highly secure platform, but also for providing access to a broad portfolio of cryptocurrencies, enhancing the scope for a well-rounded investment strategy. Conclusion and final thoughts. The approval of a Bitcoin ETF is a significant milestone for the crypto market and presents exciting opportunities for investors. It brings accessibility, diversification, and potential tax advantages to those interested in gaining exposure to Bitcoin. However, it is essential for crypto investors to conduct thorough due diligence and explore alternative investment options that align with their individual goals and risk tolerance. As the crypto market continues to evolve, it is crucial to stay informed and adapt investment strategies accordingly. The approval of a Bitcoin ETF is just one piece of the puzzle, and there will undoubtedly be further developments and advancements in the crypto space in the years to come. By staying informed, diversifying investments, and seeking professional advice when necessary, investors can navigate this exciting and ever-changing landscape with confidence.